Hey, what's happening? Welcome to Ohio Real Estate. My name is Jason Ferrier. And one of the things that I'd like to do is bring on local experts here in Central Ohio and the Licking County, Columbus area to come on and talk about what's happening in different areas of real estate. And one of the areas that is highly important is obviously lending and uh, mortgage origination. So today, I have the great pleasure of sitting with Brach Fabbro. Brach is with a company called Equity Resources out of Newark, Ohio, just down on the Newark Square. He's a hometown Newark guy, fantastic loan officer, and he's here today to kind of give us an update of what's happening with local mortgage rates and just the pulse of the borrower. So, how you doing, Brock?
I'm doing good, Jason. How you doing today?
Good, man. Thanks for
Good.
joining me. All
Absolutely.
right. Yeah. So look, let's get started. So, right now what I'm seeing is that buyers, there are buyers out there, despite what you see in the headlines, there are buyers making purchases and closing deals. And so, it's not that it definitely is slower than it was historically over the last 2 or 3 years as far as the pace of sales. And rates have certainly gone up, but that doesn't mean there aren't people out there still buying property. And if you're out there looking for real estate and wanting a mortgage, they are still closing. And so Brock's here to kind of tell us what's happening in Newark and Licking County.
That's exactly right, Jason. There's still a lot of activity out there as far as buyers. Obviously, the refinance business is down a little bit. Those rates from 2020 and 21 kind of disappeared. But I have a first-time home buyer this afternoon at noon, closing on their very first home. They're utilizing a no money down program. They're actually getting money back at the closing, which is kind of cool. So rates are a little bit higher, but we keep, saying if you see a house out there that you like, that you want to buy, we can renegotiate the rate, but we can't renegotiate that purchase price once you're in it. So, kind of like we've talked about in the past, we do anticipate that home values are going to continue to rise. Interest rates tend to ebb and flow. If you look through history, rates have been higher than this before. So it was kind of a sticker shock from 2020 until today. We went from an all-time historic low to rates shot up 5, 6, 7%. It seemed like overnight. So, I think a lot of sticker shock, but there's still a ton of folks out there looking to purchase.
Great, great. Yeah, obviously there are. I, you know, I think if you got really comfortable at a 3.5 or 4% rate, maybe it was sticker shock, but I think people are getting used to it. And historically, I think the rates we're seeing now are in line with, long run historical averages. The question is like, what if you're speaking to first time home buyers, if you're a first time home buyer, or maybe even not a first time home buyer, but you're just looking for a special program that you may have to offer, can you go over some of the programs that you have to offer?
Absolutely. So a program that I specialize in is a bond program through the state of Ohio. It's through Ohio Housing Finance Agency, and what they do is they actually offer up to 5% down payment assistance for first-time homebuyers, and they actually have an Ohio Heroes program too. So if you're a nurse, paramedic, in that type of field, teacher, you're actually going to see a little bit better rate. You're going to see a little bit better program, but it is a phenomenal program. They set their own guidelines. They follow Fannie and Freddie and all that good stuff, but they do set their own rates. They're a little bit higher than what you'll normally see if you bring your own money, but they're really not that far off. And if you can go into a house with little to no money down, it is such a benefit, especially for a first-time home buyer. Families getting started, looking to purchase their first house. Even with a higher rate down the road, we can always refinance.
Right. Right. Yeah, absolutely. So what about buying point, like explain the buying the rate down. Explain that a little bit and what that
Sure.
means and how that would work.
So let's say you are looking to purchase a home, and let's say we're looking at an average rate today, conventional. It's between 7 and 7.25 right now, typically on a 30-year conventional. Let's say you want to buy that rate down a little bit, maybe get to a 6.5%. The way it's going to work is you're going to buy points, and those points actually are basically you're paying your interest in advance. So you're paying the the rate down to obtain a better rate. Now, typically what I like to present are multiple options. So I'm going to give you an option with no points, what it might look like with buying points down, and then it's got to make sense. So really what we want to look at is your break-even point. So when am I, if I invest $2,000 up front, what month will I recoup that money to now where it's just a monthly savings? So really the conversations that I'm having is we do anticipate rates are going to come down. I don't have a crystal ball and can't tell you exactly when, but we're thinking, as we head into later this year, into next year, we should start seeing some improvements. And do the rates come down far enough where if I buy today, I can refinance 12, 24, 36 months down the road? So, if the answer to that is yes, and we do see that improvement, would it make sense to put money up front or just kind of wait and bite the bullet a little bit? Because at the end of the day, we're going to save you money if we can refinance that rate. The other thing we want to look at too is if you're in a conventional loan, has the equity in your home increased over the last few years where we can A, reduce your rate, and B, eliminate that mortgage insurance. So if we can do both, it is such a win-win.
So are you saying that are you seeing people refinance out of lower rates into rates today to remove the PMI because their equity has gone up?
So not necessarily. We're not seeing that so much because especially if you purchase in 2020 or 21, you're in a really good interest rate, and to remove that mortgage insurance requirement, will your payment go up? Now, there's some different ways that we can actually look to remove that mortgage insurance. You can actually contact your servicing company and see if you can simply remove that mortgage insurance requirement without a refinance. Now, that might be a possibility, but I would encourage you to reach out to your servicing company for details on that.
Yeah, that's a good idea.
Yeah.
Right, because that can save you a few $100 a month, maybe.
Absolutely. And that money really doesn't benefit you. It's there to protect the lender in case you were to default on your loan. So if we can eliminate, a expense every month that's really not benefiting us, that's really what we want to do.
Right. Yeah, it's just kind of throwaway money.
Yeah.
Can you write that off? Do you know that PMI?
I'm not sure on that. I would reach out to your tax advisor and
right.
Yep.
Yeah.
Absolutely.
So what's let me ask you this. What would you say, we'll switch gears for a second. What would you say is the biggest mistake you see buyers in general make when you get your hands on them, when they first come to you? And what's the biggest mistake you see them making that could be a way to maybe correct folks so that they don't make the same mistake in the future?
I would say the biggest couple things that I see. So there's a lot of misconceptions in the mortgage industry. There's still a lot of folks out there that think you need to bring 20% down to purchase a home. Simply not true. We have no money down programs. We have what's called a conventional 97 program, which is a 3% down. And FHA, if you're looking at a government-backed program, is 3.5% down. And then the other thing that I see is I think a lot of people are scared, to take that jump. They think, A, I'm not going to qualify. B, this is overwhelming, and I'm not really sure what the next step is. We've kind of utilized technology to our benefit. So I have a mobile app. I can text it to you. You can complete a mortgage application from your lazy boy. You can upload documents from your lazy boy, and you can even sign and purchase a home straight through the app. Obviously we got to show up in person to close you, but everything else is done through technology, and it's really, really made the process very, very easy.
Yeah, I've actually used your app before when I'm with a client in a house and we're touring it. And I would say one of the things I see buyers doing that I wish they wouldn't. It'd be nice if you could somehow infiltrate their brain before they start working with you to make sure they have this all lined up. But it's amazing how many buyers just use Zillow for the payment estimate. I mean, they'll just go on Zillow and say, "Oh, this house is $1,500 a month," and they don't have no idea like what's behind the data there. They don't know if it includes taxes. They have no idea what rate they're quoting. And so I've used your app actually in a house before, because I say, well, Brock, you're working with him. Have you asked him what the payment is? And they, a lot of times will say, no, I haven't checked on this particular house. And then we can bring it up right there and look at the payment. And that helps. But I'm continually amazed at how many people just kind of guess at their payment.
Yep.
And I would think that if their guess is low, and then they go to close, or they get the closing disclosure and they're like, wow, this is higher than I thought. It's their fault, but that is a mistake I see them make. So I guess the point is they probably need to reach out to you quickly and then utilize the tools that you have to make sure they get the right info.
Absolutely. I actually have a client that went into contract last night, and she was bouncing some different payments off me. Like, hey, if we offer this, what's the payment look like? If we offer this, what's the payment look like? If I put 5%, 20%, what's the difference in payment? And that's what I'm here for. I want to educate you. I want to let you know what your payments are going to look like, how much you're bringing to the table. And my numbers are pretty tight. So if anything, when I give you a quote, they're going to be just a tick high. Because when we go to the closing table, I don't want any surprises. I don't want anybody saying, hey, you told me this was going to be $2,200 a month and we're looking at $2,500 a month. I don't have those conversations. So I really try to make sure that I do a good job on my side. So when you purchase that home and you sign, you know exactly what you're getting into.
Awesome. Great. So speaking of education, do you have any free resources for people that are looking to buy a home maybe for the first time? Do you have any courses or anything like that you can recommend?
So honestly, that mobile app that we were just talking about, has a plethora of information in it. So once you download my app and you go through the app, there's tons of educational videos. So we really want to add value to our clients, to our realtor partners. We don't do a whole lot of advertising. You're not going to see a lot of equity resources out there. You might see us here and there, because what we really try to hang our hat on is providing what we call raving fan customer service. So if we can provide you with great customer service, which in my opinion is dying a little bit in this world, you're going to tell your friends, your family, and you're going to come back and see me again. And that's really, really how we do business. We are a local lender, so we're not a big chain like Rocket, or, we're not a big bank like Huntington or Chase. So we really value our clients. We really value that interaction, and we really want to, give you a great experience. So you come back, you refer your friends, your family, and that's what we try to achieve.
Yeah, I mean, folks, if you need a lender in Central Ohio, you probably won't find a better guy to work with than Brach. I mean,
I appreciate that.
I've worked with you several times, and you've helped me in many situations and given me a lot of great information and guidance. So and you provide awesome customer service to the clients that I have sent you. I wish I could send more, but you do a great job nonetheless. And so, so how can the folks get a hold of you? How should they contact you?
So there are a few different ways you can contact me. You can contact me. I actually have a website. If you type in my name, which is BRACH, my last name FABBRO, I'll pop up. My website will pop up through Equity Resources. But all my clients have my cell phone number. So if you want to text me or call me, my phone number is 740-616-3565. I'm available every single day. That means Sundays, that means evenings, that means mornings. And that's really how I try to be different, because I'm just available. So if I'm, my son plays baseball, travel baseball's coming, I take my laptop with me, I got my cell phone with me, and there's been many a times where I'm watching a game for my vehicle, running numbers for my clients, because I know the importance. If you're looking to put an offer in a house in a market, even today when it's a little bit slower, we're still seeing multiple offer situations, and you need answers now. You need to be able to put that offer in now. And that's what I'm here for. That's what I hang my hat on. And, I'm in your corner. I understand the business. I've been doing this since 2013. So I got a couple years under my belt here. And, I want to help you find that dream home. And, like I said, I got a closing today, and they are some friends of mine, and they're just ecstatic. They are so excited, and just how much it means to them and to their family to get the keys to this house today. They've been really working hard for a few years. And if you're in this business, I don't understand how that ever gets old. I'm getting chill bumps right now just talking about it, because it's the largest purchase most people will ever make in their entire lives, and it impacts them so greatly. And it's just such a great way to build wealth. We're building equity in these homes. And when you go to sell, you're not just throwing rent money away every month. You're paying down a mortgage, you're building equity in a home, and you're building wealth. And really that's really what we're trying to achieve.
Yeah, well, you guys are. I mean, it's awesome to the way that you work in the community, and when you have a first time buyer or even a second time buyer, but they've maybe recovered from some kind of financial crisis, or they've built themselves up to the point that they can purchase a house. I agree. Great feeling to be able to be a part of that and have them trust you with that.
Absolutely.
Part of their life. It's
and the other thing, not to interrupt you, but the other thing we want to look at too is like, maybe you're not ready to buy today. Maybe you have some credit issues. Maybe you're not exactly where you need to be. Today's the best time to call. I want to educate you. I want to let you know exactly what you need to do. I literally had a conversation this morning with a woman. She's about 12 months out. I told her A, B, and C, this is what we need to do. I'm going to follow back up with her. And hopefully 12 months from now, we're helping her buy her first home. So even though it might be no today, it's not no forever. If there's a will, there's a way.
Yeah, that's probably maybe the best thing we talked about today was that. I'm sorry to bring that up earlier, but I mean, having the ability to counsel somebody that has the idea to purchase a house in the future, but maybe not ready today. You're right. Now with rates the way they are, maybe and maybe it is the best time to kind of buckle down and get that all in order, so that if and when rates do drop, you're in the game, and preparing somebody that's a huge service you're doing. So I applaud you. And I tell a lot of people, I do tell people all the time, they call me about looking at a house. And the first thing I ask, obviously, have you been through lending process yet? Are you qualified? And if they say no, and then they're like, to tell you the truth, I don't really know much about that. When I send them to you, I know that you're going to take them through that. And then it could be, a year before they're ready, or more or less, doesn't matter. But you're not just going to say, well, you're not qualified, so see you later.
No. And there's actually some lenders that do that. They'll just, they'll have somebody apply, say, nope, sorry, I can't help you. Your credit's not there. Well, why is their credit not there? What do they need to do? And that's what I'm here for. I want to educate you, because we don't know what we don't know. If you've never purchased a house before, a mortgage just seems terrifying to some people. And it's not when you have the right team behind you, representing you, and have your best interest in mind. And that's what I'm here for. I want to help everybody that I can purchase a home. And those closings where it might have been no 12 months ago or 24 months ago, and then they do, what I counsel them to do. Those are some of my favorite closings. We get to the closing table, there's tears, there's laughing. I mean,
right.
It's so emotional, and it is such a great feeling, because it really is the American dream.
Yeah. And I mean, there's a lot of people that talk the talk, but you clearly walk the walk when I watch you do it. And every time I interact with you, it's great. So I'll put Brach's information in my description below. And you can access him anytime, call him. Like he said, he may be at a baseball game, but he'll still pick up your call. Yep. And thanks, Brach. Thanks for the time today. And we'll do this again. We'll do this again next month.
Yeah, it sounds great. I appreciate it, Jason, and hope everybody has a great weekend.
Yeah, you too, man.
Thank you.
Great. Hey,